Welcome to TradeTheMBA.com. This is John. This report is for the 5th of June, and you can see that after that turnaround off the algo support, once we got to the 62, I was predicting somewhere around this 38% to 50% range would be the likely return to see where we end up as far as the DOC read. Now we've moved to the plus 13.5, so that's as if the steel is coming from underneath. So as long as it remains up in that stratosphere, we will continue to see some bullish activity from it. Strong reaction from the shakeout, and look at that, the shorts just completely failed right down all the way to the negative 7.5. That actually could produce some more bullish. We would need to see this green crossover to really confirm that it's going to have a little bit more legs. You can already see potential of getting overbought after just a couple of days. That may mean that we're going to, have a revisit to those lows. So we'll see. It's not yet. I wasn't worried about the fact that we knew there was continuation built into it. In fact, look at the 50K. It was a pretty strong move from the early buy setup, and still within that. I mean, that cyan is clearly well below the red. Now we're above that plus 13 for the red DOC. So the clock is ticking. Positive extremes from right in this level, and the upper one right there had already been filled in, but. This second half range right here has a low right around the 2800 range. But 2820 was right what I was talking about from a potential standpoint of what I thought would be a possible move back up. The euro spike certainly has helped. This whole talk of tariffs, blah, 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 certainly helping other currencies rally against the dollar. Plus the Fed talking about potentially easing, which that's interesting. I think you got to imagine that's some pressure from Trump on that, because all the indicators are the economy is doing fine and everything, that it really wasn't necessary to do anything with rates. Of course, I always said from a year ago that they were raising them too fast for no reason, and it proved to be true because there really hasn't been any inflation or anything, so we don't know how much negative impact that rate increases that they've already done had. We could have seen a really explosive economy, but that one's not going to be known. And gold continuing its move with that cyan so far below red. It should look to continue even further. From the 5K standpoint, not even much to talk about. It was just straight up continuation, consolidation, and then just keeps rising. Good brief points, and these weren't bad as far as the DOC spreads. It's just that because you didn't have steel coming from below, that any dip is going to be short-lived, and in fact they were. I mean, a little bit of a dip, but returned right back up. And all of them were pretty much that same configuration until we got right over here where we finally made it above, but when this did close back, you couldn't get DOC spread for the cyan moving up. So no consistency within any of those attempted short moves. And still don't have one at this particular point, so still overall bullish. Gotta like that. We knew that was a good possibility, and very easy to see why those short configurations with DOC spreads were not going to produce that much of a decline. And so I think that's very helpful in being able to assess which ones have stronger potential. So, as always though, if there's anything new or relevant, I will certainly get it up there for you. Trade well. We'll talk to you later.